Given the price history and forecast for Bitcoin, a long-term bullish strategy appears promising. The price has shown a clear upward trend with several bounces off the support level, indicating strong buying pressure. The forecast suggests continued upward movement, reaching $104,000 in the coming weeks. This aligns with the historical price action and suggests a potential continuation of the uptrend. Therefore, I recommend a long-term investment strategy for Bitcoin. Enter a long position at the current price of $102,000. Set a stop loss at $94,552.42, the identified support price, to protect against a significant downside move. Aim for a target price of $104,835.50, the resistance level, to capitalize on the anticipated price appreciation. This strategy allows you to ride the potential upward momentum while managing risk effectively. Based on the provided information for Bitcoin Cash, a cautious investment strategy would focus on a short-term approach. The historical price data reveals a fluctuating trend with recent dips. The forecast indicates further potential declines in the coming week, aligning with the bearish sentiment. The support price at $424.90 offers a potential floor for the price, while the resistance at $461 suggests limited upside potential in the near term. Considering these factors, a short position on Bitcoin Cash appears to be the most suitable strategy. An entry price around $435, near the current price, allows for quick action as the price potentially moves towards the forecast lows. A stop loss could be set at $445 to minimize potential losses if the price unexpectedly surges. The target price should be set at $420, aiming to capture a portion of the predicted decline while staying mindful of the support level. Given the price trends and forecast for stacks, a conservative investment strategy would focus on a short-term approach. The historical prices show a clear downward trend, with the forecast indicating further declines. The forecast suggests stacks could drop from its current price to as low as $1.15, while the support price sits at $1.056 and resistance at $1.453. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $1.39, close to the current price, would be ideal. The stop loss should be set at $1.42 to protect against any unexpected price recovery. The target price should be set at $1.25, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.056. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Based on the provided price information for Ethereum, a cautious investment strategy would be advisable. The 2-week price history demonstrates fluctuations, with no clear upward or downward trend. The forecast suggests a slight decline over the next week, which aligns with the recent price dip. The support price of $2,660.31 acts as a significant floor, while the resistance at $3,340.26 presents a considerable barrier for upward movement. Given this context, a short-term investment strategy with a long position appears suitable. The entry price should be set around $3,220, aligning with the recent price action and the forecast. A stop-loss order at $3,190 would protect against potential losses if the price drops below the anticipated level. The target price could be set at $3,300, aiming to capitalize on a potential rebound towards the resistance level. This strategy aims to capitalize on a short-term price increase while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Ripple, a medium-term investment strategy appears promising. The historical prices demonstrate a slight upward trend, but the recent 2-week period has seen some consolidation. The forecast suggests a potential continuation of this upward movement, with prices likely to reach around $3.35 in the coming week. The support price at $2.4859 provides a safety net, while the resistance at $3.1756 indicates a potential ceiling for the near term. Therefore, a long position in Ripple is recommended for a medium-term investment horizon. An entry price around $3.10 would allow you to buy in near the current price while still benefiting from potential upside. A stop loss at $3 would protect your investment from significant downside risk, and a target price of $3.30 would allow you to capitalize on the forecasted price increase. This strategy aims to capture a portion of the potential upward movement in Ripple while managing risk effectively. Given the price trends and forecast for Binance Coin, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. While the support price sits at $667.01, the resistance is at $721.33, suggesting limited upward momentum. Therefore, a short position would be advisable to capitalize on the anticipated price decline. An entry price of $685 could be considered, aligning with the forecasted price. To protect against unexpected price surges, a stop loss should be set at $695. The target price could be set at $670, aiming to capture potential profits before the price reaches the support level. This strategy allows for a quick entry and exit, maximizing potential returns within a short timeframe while managing risk effectively. Based on the provided information for Stellar, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a volatile trend with recent fluctuations around 42 cents to 49 cents. While the forecast predicts a slight decline in the coming weeks, hovering around 42 cents, the support price at $0.4057 suggests a potential floor for the asset. Therefore, a long position could be considered with an entry price near the support level of $0.4057. This allows for potential upside if the price rebounds towards the recent highs. A stop loss could be set slightly below the support at 40 cents to minimize risk. The target price could be set at $0.4312, the resistance level, aiming for a moderate gain within a few weeks. This strategy balances the potential for profit with risk management, taking advantage of potential price recovery while mitigating losses in case of further decline. Based on the provided Toncoin price information, a cautious investment strategy for the medium term appears most suitable. The historical price data reveals a fluctuating trend with recent dips, suggesting a period of consolidation. The forecast indicates a slight downward trend, albeit within a relatively narrow range, further supporting a cautious approach. Therefore, a long position is recommended, aiming to capitalize on potential price rebounds within the medium term. An entry price around $5.05, slightly above the current price and below the support level, would be prudent. The stop loss should be set at $4.93, aligning with the support price, to minimize potential losses. The target price could be set at $5.30, aiming to capture a reasonable profit margin while staying below the resistance level. This strategy allows for potential upside while mitigating risks associated with the current price volatility. Based on the provided Cardano price information, a cautious short-term investment strategy appears most suitable. The recent 2-week price history demonstrates a downward trend, with the forecast suggesting further declines. While the support price at $0.8498 provides a potential floor, the resistance at $1.0597 suggests limited upside potential in the near term. Therefore, a short position on Cardano is recommended. An entry price around 98 cents, near the current price, would be appropriate. The stop loss should be set slightly above the recent high of $1.01 to mitigate risk. The target price could be set at 92 cents, aligning with the forecast and allowing for potential profit before the price potentially reaches the support level. This strategy acknowledges the current bearish sentiment and aims to capitalize on the anticipated decline while managing risk effectively. Based on the provided Litecoin price information, a moderately aggressive investment strategy focusing on the short term appears most suitable. The historical price data demonstrates a slight upward trend, with recent fluctuations around the $115 to $125 range. The forecast suggests a continuation of this upward momentum, with prices potentially reaching $123 within the next week. This aligns with the support price of $115.25, indicating a strong base for potential growth. Considering this, a long position in Litecoin is recommended. An optimal entry price would be around $117, slightly below the current price and the forecasted peak. A stop-loss order should be placed at $115.25, ensuring protection against any sudden price drops below the support level. The target price should be set at $123, aiming to capitalize on the anticipated price increase towards the forecasted peak. This strategy allows for potential profit while mitigating risk within a relatively short timeframe. Given the provided price information for Sway Coin, a conservative investment strategy would focus on a short-term approach. The historical prices show a volatile trend with a recent decline, aligning with the bearish forecast. The forecast suggests Sway Coin could drop further, reaching as low as $3.72 within the next week. The support price sits at $3.8716, indicating a potential floor for the price. However, considering the downward momentum and the forecast, it's advisable to take a cautious approach. Therefore, a short position is recommended for this investment strategy. An entry price of $4 would allow for a reasonable entry point, aligning with the current price and the forecast. The stop loss should be set at $4.15 to protect against any unexpected upward movement. The target price should be set at $3.80, aiming to capitalize on the potential price decline towards the support level. This strategy aims to minimize risk while potentially profiting from the anticipated short-term price decrease in Sway Coin. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Aptos could drop from its current price to as low as $6.98, while the support price sits at $6.30. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $8.08 would be ideal, aligning with the current price. The stop loss should be set at $8.38 to protect against any unexpected price recovery. The target price should be set at $7, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $6.30. Based on the provided data for SAY, a cautious investment strategy is recommended. The 2-week price history shows a downward trend, with the price falling from $0.407 to 32 cents. The 1-week forecast further anticipates a decline, reaching as low as $0.279. This consistent downward momentum, coupled with the forecast, suggests a bearish outlook for SAY in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decline. A suitable entry price would be 34 cents, aligning with the current price and the beginning of the forecast decline. The stop loss should be set at $0.361, the recent high, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.286, slightly above the forecasted lowest price, allowing for profit taking before reaching the support price of $0.2845. This strategy prioritizes risk management by setting a clear stop loss while aiming for a reasonable profit target based on the forecast. Given the provided price information for Ethereum Classic, a cautious investment strategy is recommended. The historical prices show some volatility, but the forecast indicates a potential for sideways movement with prices hovering around the $26 level. The support price of $26.12 suggests a floor for the price, while the resistance price of $29.11 presents a ceiling. Considering these factors, a long position with a conservative approach is suggested. The entry price could be around $26.20, slightly above the support price, allowing for some room for the price to stabilize. The stop loss should be set at $25.80, below the recent lows, to minimize potential losses. The target price could be set at $28.50, aiming for a moderate profit while staying below the resistance level. This strategy aims to capitalize on any upward momentum while mitigating risk with a well-defined stop loss. The medium-term investment perspective aligns with the forecast's indication of sideways movement, allowing for potential profit accumulation over a period of weeks. Given the provided price history and forecast for Polygon, a cautious investment strategy focusing on the short term seems appropriate. The price history shows a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. While the support price is at $0.3844, the forecast suggests a potential drop below this level. Considering this bearish outlook and the potential for further price decreases, a short position is recommended. An entry price of $0.439 could be considered, aligning with the current price and the resistance level. The stop loss should be placed at $0.453 to limit potential losses if the price unexpectedly rebounds. The target price could be set at 39 cents, aiming to capitalize on the anticipated decline towards the support level. This strategy allows for a potential profit while mitigating risk by setting a clear stop loss. Based on the provided price history and forecast for AEVO, a short-term bearish strategy appears to be the most suitable approach. The historical price data shows a downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The price is currently hovering near the lower end of its recent range, suggesting a potential for further downward movement. Therefore, a short position is recommended for a short-term investment perspective. A suitable entry price would be around $0.285, aligning with the current price and the forecasted decline. To manage risk, a stop-loss order should be placed at $0.295, slightly above the entry price, to limit potential losses. The target price could be set at $0.265, aiming to capture a significant portion of the anticipated price drop. This strategy aims to capitalize on the short-term bearish momentum of AEVO, with a focus on risk management and potential for profit. Based on the provided data for optimism, the historical price trend suggests a downward trajectory. The forecast price further reinforces this bearish outlook, indicating continued decline over the next week. The current price is hovering near the support level of $1.337, which could act as a potential buying opportunity for those with a long-term perspective. However, given the strong downward momentum and the forecast, an aggressive short-term investment strategy would be more suitable. Therefore, I recommend a short position on optimism. An entry price of $1.56, aligning with the current price, would be ideal. To manage risk, a stop loss should be placed at $1.63, slightly above the current price. The target price should be set at $1.33, slightly above the support level, allowing for potential profit capture before the price potentially rebounds. This strategy capitalizes on the anticipated decline in price while mitigating potential losses. Based on the provided price history and forecast for STRK, a cautious investment strategy with a short-term perspective seems most appropriate. The historical price data reveals a downtrend over the past 2 weeks, with the forecast projecting further declines. The current price is hovering near the support level of $0.3346, suggesting a potential bounce back. However, the forecast indicates a continued downward trajectory, making a long position risky. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of 37 cents, slightly above the current price, allows for some room for price fluctuation before entering the short position. The stop loss should be set at 38 cents, protecting against unexpected upward price movements. The target price can be set at 33 cents, aligning with the support level and providing a reasonable profit target. This strategy aims to capitalize on the short-term bearish trend while mitigating potential losses through a well-defined stop loss. Based on the historical price data and the provided forecast for Solana, a short-term bullish strategy appears to be the most suitable approach. The price has shown a generally upward trend, albeit with some recent fluctuations. The forecast suggests continued growth, with prices potentially reaching $246 to $252 in the coming days. Therefore, an investment strategy could involve entering a long position at the current price of around $240. A stop-loss order could be set at $237 to limit potential losses if the price unexpectedly drops. The target price could be set at $255, aiming to capture a significant portion of the anticipated price increase. This short-term approach capitalizes on the bullish sentiment and aims to profit from the predicted upward movement in Solana's price within the next week. Jupiter's historical price data shows a volatile trend with both upward and downward movements. The forecast suggests a potential upward trajectory in the coming weeks, with prices projected to reach around $1.23. This positive outlook, coupled with the current price being relatively close to the support level of $1.0662, indicates a favorable environment for a long-term investment strategy. Therefore, a long position in Jupiter is recommended. An ideal entry price would be around $1.08, allowing for some room to absorb potential short-term fluctuations. A stop-loss order should be placed at $1.06 to minimize potential losses if the price drops below the support level. The target price could be set at $1.20, aiming to capitalize on the projected upward movement while providing a healthy profit margin. This strategy takes advantage of the forecast's bullish sentiment and aims to achieve moderate returns over a medium-term investment horizon. Given the price trends and forecast for render, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. While the support price sits at $5.096, the forecast suggests render could drop to as low as $5.95, indicating a bearish outlook in the short term. This suggests a short position is the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $6.95 would be ideal, aligning with the current price and the forecast's first point. The stop-loss should be set at $7.25 to protect against any unexpected price recovery. The target price should be set at $5.95, aligning with the forecasted lowest price, allowing you to take profits before the market hits major support at $5.096. Based on the provided price data and forecast for Solana name service, a cautious investment strategy is recommended due to the generally downward price trend. The historical prices show a slight decline over the past 2 weeks, and the forecast predicts further decreases in the coming week. The support price at $0.193 acts as a potential floor for the price, while the resistance at $0.2124 suggests limited upward potential. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.208, slightly above the current price and below the immediate resistance, allows for a potential profit margin. The stop-loss should be set at $0.212, above the entry price and below the resistance, to limit potential losses. The target price should be set at $0.195, slightly above the support price, allowing for a reasonable profit target while minimizing the risk of a significant price rebound. This strategy aims to capitalize on the bearish momentum while managing risk effectively. Based on the provided Doge-Coin price data and forecast, a short-term bearish investment strategy is recommended. The historical price data shows a downward trend over the past 2 weeks, and the forecast predicts further declines. The current price is hovering near the support level of $0.33504, suggesting a potential for a bounce, but the overall trend remains bearish. Therefore, a short position on Doge-Coin is advisable. An entry price of $0.345 would allow you to capitalize on the downward momentum. The stop-loss should be set at $0.355 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.328, aligning with the lowest forecasted price, allowing for a conservative profit target while minimizing risk. Given the price trends and forecast for PEPE, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a generally downward trend, with the current price hovering near the support level. The forecast suggests further declines, indicating a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.0000150 aligns with the current price and the forecasted decline. The stop loss should be set at $0.0000155 to protect against any unexpected price recovery. The target price should be set at $0.0000135, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.0000086. This strategy prioritizes risk management and aims for modest gains in the short term. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests SHIB could drop from its current price to as low as $0.0000178, while the support price sits at $0.0000190 and resistance at $0.0000212. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.0000201 would be ideal, aligning with the current price. The stop loss should be set at $0.0000204 to protect against any unexpected price recovery. The target price should be set at $0.0000187, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.0000190. Based on the provided price history and forecast for DOG-Coin, a short-term bearish investment strategy is recommended. The historical price data shows a consistent downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The price is currently hovering near the lower end of its recent range, suggesting a potential for further downside movement. Therefore, an entry price of $1.30, slightly above the current price, is suggested to capture any potential upward bounce before the price resumes its downward trajectory. The stop loss should be set at $1.35 to limit potential losses if the price unexpectedly moves higher. The target price is set at $1.15, aligning with the forecasted lowest price, allowing for a potential profit before the market potentially finds support. This short-term bearish strategy aims to capitalize on the anticipated price decline in DOG-Coin. First, based on the provided price history and forecast for Doge-Coin, a short-term investment strategy appears most suitable. The historical prices exhibit a clear downward trend, and the forecast reinforces this bearish outlook, predicting further declines. Therefore, a short position would be the most logical approach to capitalize on this anticipated price drop. An entry price of $0.00492 aligns with the current price and the downward trend. The stop loss should be set at $0.00519, slightly above the recent high, to minimize risk of a sudden price reversal. The target price could be $0.00455, which represents a reasonable profit margin based on the forecast and historical price movements. This strategy aims to take advantage of the short-term bearish momentum in Doge-Coin, aiming for a quick profit before the price potentially stabilizes or rebounds. Based on the provided price history and forecast for NEAR protocol, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price history shows a downward trend, with the forecast indicating further declines in the coming week. While the support price at $3.811 provides a potential floor for the price, the resistance at $4.71 suggests limited upside potential in the near term. Therefore, a short position on NEAR protocol is recommended. An entry price around $4.70 would allow for capitalizing on potential price declines towards the support level. A stop loss at $4.80 would help mitigate risk if the price unexpectedly rises. The target price could be set at $4.40, aiming to capture a reasonable profit before the price potentially rebounds. This strategy acknowledges the current bearish sentiment while providing a defined risk-reward profile for a medium-term investment horizon. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $8.756. The forecast indicates further declines, with the price potentially dropping to as low as $8.38. This suggests a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $9.03, aligning with the current price. The stop loss should be set at $9.255, the resistance level, to protect against any unexpected price recovery. The target price could be set at $8.50, slightly above the forecasted lowest price, allowing for a reasonable profit margin before the market potentially bounces back. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a defined stop loss. Based on the provided injective price data, the 2-week price change reveals a downward trend, with the forecast predicting further declines. The historical prices show a consistent downward trajectory, currently hovering near the support price of $18.03. This indicates a bearish outlook for injective in the short term. Given this trend, a short position seems like the most suitable strategy to capitalize on the anticipated price decline. To execute this strategy, an entry price of $20 would be ideal, aligning with the current price and the forecast's initial decline. A stop-loss order should be placed at $21 to limit potential losses if the price unexpectedly rises. The target price should be set at $18, slightly above the support price, allowing you to take profits before the market hits major support. This strategy focuses on a short-term investment perspective, aiming to capitalize on the immediate downward momentum of injective. BTC shows a 2-week price change with fluctuations, but generally trending upwards. The forecast indicates continued upward momentum in the coming week. Considering the historical price data, the current price is near the support price, suggesting a potential for further price increase. The resistance price is relatively high, indicating a potential ceiling for the short-term price movement. Based on this analysis, an investment strategy for BTC should focus on a long-term perspective. A long position can be initiated when the price dips slightly towards the support price of $408. The stop loss should be set slightly below the support price at $405 to minimize potential losses. The target price can be set at the resistance price of $470.20, aiming to capitalize on the anticipated upward trend. This strategy allows for a gradual accumulation of profits as the price moves towards the resistance level. Remember that this is a long-term investment strategy, and patience is key. Given the price trends and forecast for THETA network, a conservative investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and near the support level of $1.387. The resistance is at $2.224, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $1.98 would be ideal, aligning with the forecasted price. The stop loss should be set at $2.04 to protect against any unexpected price recovery. The target price should be set at $1.85, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.387. Based on the provided price history and forecast for WorldCoin, a short-term bearish strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines over the next week. This indicates a lack of strong upward momentum and suggests potential for profit from a short position. Therefore, an investment strategy for WorldCoin should involve entering a short position at the current price of approximately $2.08. A stop-loss order should be placed at $2.15 to mitigate risk if the price unexpectedly rises. The target price should be set at $1.87, aligning with the support price and the lower end of the forecast range. This strategy capitalizes on the anticipated price decline while managing risk with a well-defined stop-loss. Hooked Protocol's price history shows a clear downtrend over the past 2 weeks. The forecast also predicts a continued decline in price over the next week. This downward trend, coupled with the forecast, suggests a bearish outlook for Hooked Protocol in the short term. Therefore, an investment strategy focusing on a short position would be most suitable. A suitable entry price for this short position would be $0.298, aligning with the current price and offering a reasonable margin for potential price fluctuations before the predicted decline. The stop loss should be placed at $0.3035, the resistance price, to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.278, slightly above the lowest forecasted price, allowing for profit taking before the price potentially stabilizes near the support level. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. The Artificial Superintelligence Alliance price data shows a recent downtrend with a bearish forecast. Considering the 2-week price change, the current price is below the recent highs, and the forecast suggests further declines. The support price of $0.816 represents a potential floor for the price, while the resistance at $1.245 indicates a significant barrier to upward movement. Given this analysis, a short-term bearish strategy is recommended for Artificial Superintelligence Alliance. An entry price around $1.22, near the current price, allows for immediate participation in the anticipated downtrend. A stop-loss order should be placed at $1.28, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price for this strategy is $1.15, aligning with the forecast and aiming to capture a portion of the expected decline. This short-term approach allows for capitalizing on the immediate bearish momentum while managing risk through a well-defined stop-loss order. Polkadot shows a downtrend over the past 2 weeks, with a forecast suggesting continued decline. The historical prices indicate a consistent downward movement, reaching a recent low of $6. The support price is at $4.206, while the resistance is at $6.405. Given the prevailing bearish sentiment and the forecast predicting further price drops, a short-term investment strategy focusing on a short position seems most suitable. To capitalize on this potential decline, an entry price of $6.35 could be considered, aligning with the current price and the predicted downward trajectory. The stop loss should be set at $6.45 to limit potential losses if the price unexpectedly rises. The target price could be set at $5.85, allowing for a reasonable profit margin before reaching the support level. This strategy aims to leverage the anticipated price decline while managing risk through a well-defined stop-loss mechanism. Based on the provided data for Filecoin, a short-term bearish strategy is recommended. The 2-week price change shows a downward trend, and the forecast predicts further declines. The price is currently hovering near the resistance level of $4.928, suggesting a potential for a pullback. Therefore, an entry price of $4.95, slightly above the current price, would allow for a small buffer against potential upward movement. The stop loss should be set at $5.08, slightly above the entry price, to limit potential losses. The target price should be set at $4.65, aligning with the forecast and providing a reasonable profit target before the price potentially reaches the support level. This strategy aims to capitalize on the anticipated price decline in the short term. Given the price trends and forecast for Conflux, a medium-term investment strategy appears to be the most suitable. The historical prices show a fluctuating pattern with recent dips towards the support level of $0.1423. While the forecast suggests a slight upward trend, it remains relatively stable, indicating a period of consolidation rather than a strong breakout. This suggests a cautious approach, aiming to capitalize on potential price increases within a defined timeframe. A long position is recommended for this strategy. An entry price of $0.151, near the current price and below the recent resistance of $0.178, allows for potential upside while minimizing risk. The stop loss should be set at $0.1423, aligning with the support level to protect against significant price drops. The target price can be set at $0.169, aligning with a previous high point and representing a reasonable profit target within the medium-term timeframe. This strategy aims to capture a moderate price increase while managing risk through a well-defined stop loss and target price. Based on the Ethereum name service price history and the provided forecast, a short-term bearish strategy seems appropriate. The historical price data shows a slight downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. This suggests that the price of Ethereum name service may continue to weaken in the short term. Considering the support price of $30.89 and the resistance price of $34.51, an entry point around $33 would allow for potential profit if the price declines towards the support level. A stop-loss order could be placed at $33.50 to limit potential losses if the price unexpectedly moves upwards. The target price should be set at $30.50, aiming to capture a decent profit margin while avoiding excessive risk. This strategy capitalizes on the bearish sentiment indicated by the price data and forecast, aiming for short-term gains by taking advantage of the potential price decline. Based on the provided avalanche price history and forecast, a cautious investment strategy focusing on the short term seems most appropriate. The historical price data reveals a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast indicates a continued downward movement in the coming week, suggesting a bearish outlook for the short term. Considering this, a short position on avalanche is recommended. An entry price of $35.50, near the current price and slightly above the support price, would allow for a quick entry into the trade. The stop loss should be placed at $36.60, above the current price and the resistance price, to minimize potential losses if the price unexpectedly rises. The target price should be set at $33.50, below the forecast low, aiming to capture potential profits from the anticipated price decline. This strategy prioritizes risk management while capitalizing on the short-term bearish momentum indicated by the price data and forecast. Given the price trends and forecast for Bitcoin, a conservative investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a period of consolidation with some minor upward and downward movements, suggesting a lack of strong directional momentum. The forecast indicates a slight downward trend over the next week, with prices potentially moving towards the support level of $0.04302. In this scenario, a short position could be considered to take advantage of the anticipated decline. An entry price around $0.0475, slightly above the current price, would allow for a small margin of safety. The stop loss should be set at $0.0496 to protect against any unexpected price surges. The target price could be set at $0.0435, aiming to capture a portion of the potential downward movement while leaving room for potential price fluctuations. This strategy emphasizes risk management and aims to profit from short-term price adjustments rather than relying on significant long-term price appreciation. Based on the provided price information for PENDLE, a cautious short-term investment strategy appears most suitable. The historical price data shows a recent decline, and the forecast predicts further downward movement. Although the support price at $3.447 offers a potential floor, the combination of the bearish trend and the forecast suggests a higher probability of continued price decline. Therefore, a short position on PENDLE is recommended. An entry price near the current market price, around $3.60, would be appropriate. The stop loss should be placed slightly above the recent high, at $3.71, to limit potential losses. The target price could be set at $3.45, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management by setting a stop loss and focuses on a short-term opportunity to capitalize on the predicted price decline. The sandbox's price history reveals a downward trend over the past 2 weeks. The forecast also suggests a continued decline in the coming week, reaching as low as $0.494. Considering this bearish outlook, a short position in the sandbox appears to be the most suitable strategy. To implement this strategy, we can set an entry price at 55 cents, slightly above the current price and the recent support level. This allows us to enter the trade as the price potentially pulls back. The stop loss should be placed at 57 cents to limit potential losses if the price unexpectedly rebounds. Finally, the target price can be set at $0.495, aligning with the lowest forecasted price, allowing for a reasonable profit margin. Based on the provided Decentraland price history and forecast, a cautious short-term investment strategy is recommended. The price history shows a recent downward trend, with the forecast predicting further declines over the next week. The support price at $0.451 indicates a potential floor for the price, while the resistance at $0.4758 suggests limited upside potential. Given this outlook, a short position appears more attractive. Therefore, an entry price of $0.470 would allow you to capitalize on the potential price decline towards the support level. A stop-loss order should be placed at $0.4758 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.451, aiming to profit from the anticipated downward movement. This strategy prioritizes risk management by setting a stop-loss and aims to capitalize on the short-term bearish trend indicated by the price data and forecast. ENG coin shows a clear downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The price is currently near its support level of $0.1333, which suggests a potential buying opportunity for a long-term investment strategy. The historical price data shows that ENG coin has previously bounced back from this support level. Therefore, I recommend a long-term investment strategy with an entry price at $0.1333, a stop loss at $0.129, and a target price of 17 cents, aiming to capitalize on a potential upward trend. This strategy takes advantage of the current low price while mitigating risk with a defined stop loss. The target price is set above the historical resistance level of $0.1694, providing a potential for significant gains if the price recovers. Given the price trends and forecast for Uniswap, a conservative investment strategy would focus on a short-term approach to take advantage of the limited downward momentum. The historical prices show a consistent downward trajectory, with the current price near its forecast and close to the support level of $8.146. The resistance is at $13.137, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $12 would be ideal, aligning with the forecasted price. The stop loss should be set at $12.50 to protect against any unexpected price recovery. The target price should be set at $11, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $8.146. Given the price trends and forecast for Chainlink, a medium-term investment strategy appears suitable. The historical prices demonstrate a slight upward trend, with recent fluctuations around the $24 to $25 range. The forecast suggests a continuation of this trend, with prices potentially reaching $25 by the end of the forecast period. While the price is close to its support level of $21.62, the resistance at $26.98 indicates room for further growth. Therefore, a long position is recommended for a medium-term investment. An entry price of $24 could be considered, aligning with the current price and offering a potential upside towards the forecast price of $25. The stop loss should be set at $21.62, protecting against significant price drops below the support level. The target price could be set at $26, allowing for a substantial profit if the price reaches the resistance level. This strategy balances risk and reward, capitalizing on the potential for Chainlink to continue its upward trajectory in the medium term. Based on the provided information for Aave, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows a fluctuating trend with periods of both upward and downward movement. While the recent price action has been slightly bearish, the forecast suggests a potential for consolidation and a slight upward movement in the coming weeks. Considering this, a long position could be considered with an entry price around $315, aligning with the current price and the support level. A stop-loss order should be placed at $307 to limit potential losses in case of a further price decline. The target price can be set at $338, which represents a potential upside based on the recent historical highs and the forecast's upward trajectory. This strategy allows for capitalizing on a potential price increase while managing risk through a well-defined stop-loss. Based on the provided data for EOS, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend, with recent prices hovering around the support level of $0.4938. The forecast predicts further price declines, potentially reaching as low as $0.743 over the next week. This downward trajectory, coupled with the proximity to the support level, suggests a heightened risk of a continued downward movement. Therefore, a short position on EOS is recommended for a short-term investment horizon. An entry price of $0.803, aligning with the current price, would be appropriate. The stop loss should be set at $0.849, slightly above the recent high, to limit potential losses in case of an unexpected price surge. The target price can be set at $0.768, slightly above the forecast low, allowing for a reasonable profit margin while mitigating the risk of chasing the bottom. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss and a conservative target price. Given the historical price data and the forecast for Tron, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, with recent consolidation around the support level of $0.2453. The forecast suggests a slight upward movement in the coming week, indicating potential for further gains. Therefore, a long position is recommended. An ideal entry price would be around $0.247, slightly above the current price and near the support level, allowing for a potential entry point with a favorable risk-reward ratio. The stop loss should be set at $0.245, just below the support level, to minimize potential losses. The target price can be set at $0.253, aiming to capture the potential upside movement towards the resistance level. This strategy allows for participation in the potential upward momentum of Tron while managing risk effectively within a medium-term investment horizon. The price history of Suncoin shows a recent downward trend, with the forecast also indicating a continued decline. The current price is hovering near the support level of $0.01934, suggesting a potential for further downward movement. Given this bearish outlook, a short position on Suncoin appears to be the most suitable strategy. To execute this strategy, an entry price of $0.0211 could be considered, aligning with the recent price action and the forecasted decline. The stop loss should be set at $0.02232, slightly above the resistance level, to protect against any unexpected upward price movement. The target price should be set at $0.01934, the support level, aiming to capitalize on the potential for a price drop towards this level. This short-term strategy aims to profit from the anticipated downward momentum of Suncoin while managing risk through a well-defined stop-loss order.